I am so happy to be here with y'all. It's been a few days out of the office and to finally be here with y'all feels like good times, no doubt. Let's see. Today specifically, we're talking about several things. We're going to be talking about, of course, Ethereum, potential targets on the upside. We're going to be looking at the current early double black diamond underbelly trade on Bitcoin currently taking place. What's ahead of us? Are we being rejected right now? On yesterday's session, for those who are there, we talked about this being a pocket of resistance. You can see that's where we peaked out right now. We're going to be taking a look, obviously, across regular markets. We're going to be looking at the title of this video about what is the one major macro signal that's about to turn up that most are not watching. By the way, I always am looking for counter viewpoints. This is a interview from Macro Voices going back to Michael Howell. I might have given the wrong one on Twitter. Oops. And I'm going to just go ahead and post this inside the comments over here. If you want an opposing viewpoint to my own personal belief about what's happening with liquidity, this is the episode to watch. This right there. So I believe in obviously having multiple vantage points and viewpoints in order to go ahead and triangulate and form your own. So I offer what I believe is my base case of what I believe is unraveling across markets all the time. But I think that it's also very important to be aware of the opposing ones and help you form your own. Silver's going crazy. I want to start off with Bitcoin, but we're going to start over here with gold and silver because that will be light and sweet. And right now we're seeing silver and gold definitely on bid. Silver at $56. And what do you all make of that? What do you all make of that? That's pretty intense. I know a lot of macro bros who got interested in silver as it went above 50, then sold it down at 46. Here we are at 56, and all I can say is that's wonderful. This is surprising me. This chart here on gold, silver's not surprising me so as much as what's happening here on gold. Gold trading now at $4,200. But what's surprising to me is the strength of this. Let's say this is not a blow off. You all know from my point of view, and you all know that I expect that gold's going higher. A lot of people think gold has peaked. I don't believe that, and I think it's going higher. But I thought that out in February of next year was the most likely time frame to see a resumption of this current trend. And this line over here it's here to illustrate two things about how long I think the consolidation will last, and then where I'm wrong, and that you got to follow what's on the charts. And if it breaks above here, which we're pretty close to, you got to close your eyes and stay on the right side. That's really important. What I went over here, and as long as this lasts, roughly how long this move up out of the last consolidation lasted, I put as a estimation about how far this current consolidation should last. And the bid here is obviously relentless. It's not a debasement trade. It's a monetary reset trade. Monetary reset is happening. We just have to follow and stay on the right side over here. And if we get a breakout above, well then we'll do what we always do. We'll see where that's wrong, but you got to make sure that you're on the right side and stay on that breakout. Yeah, we could still go down. Oh no, we have to. This is my first day back with y'all, and I'm so excited to be here today. It feels really good, and I love that being able to spend this time today in this session with you is just really going to make it so on Monday I'm roaring to go and in the flow. So this is an important session over here. And by the way, thank you so much. I hope everyone that was celebrating the Thanksgiving holiday in the U.S. or abroad with their families, friends, and loved ones had such a wonderful day. And I wish that for y'all all the time. So beautiful to spend that time with friends and family. So there's a look at gold. It's notable. What I'm pointing out over here is that a break above this trend line, then we have to be on the right side, and that's crucial and that's important. Bum. So glad to be here with you all today. All right, let's start off with Bitcoin. I want to focus on Bitcoin, and after Bitcoin, I want to take a look at the NASDAQ, and then after the NASDAQ, I'll bring it into Ethereum potential targets. I said today that we'll look at how V4 has performed over these last couple of weeks. We'll do that, and we'll cover our positionings. But let's start over here with Bitcoin, and as you know, we are long Bitcoin since 88,150 from a discretionary point of view. Our positioning on Bitcoin is out on the sidelines. Bitcoin bull runs 113,000 has been on the sidelines since. On our trading, as far as Bitcoin, we're not even attacking on the short side on 107. We're just completely sidelined right now. From a discretionary vantage point, this was the earliest after we had, just really quick, you're looking here at a descending wedge, right? A descending wedge is a very bullish pattern if it breaks out to the upside. This one broke to the downside, and after it broke to the downside, we were looking for the first potential opportunity of an entry, which is this line over here. That never triggered. We broke down further, and we went ahead and we reevaluated and we added the first potential underbelly, which, by the way, wasn't. Look at this over here. And you see that the resistance that formed over here and then the support, that would have been, I was away. This was the entry over here that we should have been tracking. And I hope you could see that now with what we just did. And if you're new here and it's a little bit confusing, I understand. And don't worry, the more time you spend, it'll all become very familiar and make complete sense. So I don't want to lose you. It's very, very important. At the same time, most of the people that are here with you right now spend an incredible amount of their time investing in their education and do follow what is going on. All right. So it's important to see all the time what is missed and learn from it. And that very clear when tracking this. First of all, this looks like, if this was inverted chart, that looks like more or less like a parabolic move. But it's a parabolic move to the downside. And yeah, usually they have a bounce. And right now, this is nothing more than a bounce. So I'm going to remove this because this wasn't done live. But that's a good learning experience. That's a very important learning experience, a crucial learning experience. This is the one that we took over here. And you could see that as per yesterday's session, we were talking about this area, this pocket of resistance that we had above. That's where we're coming into so far. Now, this is representing where the stop loss is on this entry over here. Do you think at this particular time that it's prudent to move it down off of where you can see these 3 wicks here on the 8-hour? We're establishing that bit of, I think so. That's fine. That makes sense. We're going to do that. And right now this trade is opening into resistance, no problem. I'm going to have move this structural line up just a tiny bit because you can see the resistance and support. And I would like very much to hold this area, 89,500. Very much I would like to hold that. Now, it might not hold. And if it doesn't, then I want to hold down into this zone over here. And if we don't, then yes, we want to exit. We're in a downtrend. So far, we're bouncing. And, you come bouncing into resistance. So when you're in a downtrend, you're selling resistance, right? Like you're in a downtrend, you sell resistance. This resistance here might, so I'm not like, I'm setting up a buy trade. That was our earliest time, signal of a recovery. We are in a downtrend though, and in a downtrend you can sell resistance. And anyone selling this resistance here, that's also very, very much in play for discretionary traders. I am hoping that what happens is that we recover neutral into the wedge, right? And then from there, we're able to break out to the upside. If that is what happens, that becomes a very bullish scenario to have what is a descending wedge break down. And then if that winds up breaking out to the upside, this becomes a fake out, and a liquidity grab. And usually when that happens, if you get the trigger to the upside, it is a very bullish outcome. So that's what I'm hoping is going to happen. Doesn't mean it's going to happen, but we'll see. High risk, high reward. Yep. Yeah, we're gonna get to V4 in this session. I have it on the list over here, but what I don't have is, as we're talking about Bitcoin, is Bitcoin lit up, right? We like that. Let me just jump over to this slide here, and you could see from as pointing out on a weekly time frame, we're still seeing higher highs and higher lows. So here you have a high, a low, a higher high, a higher low, another higher high, and now what is potentially being put in is a higher low. That's true, and that is true. At the same time, from my own view of TA and life, by the way, you could see here from this slide, this is a very important parallel channel that we're in. You can see the two touches over here forming the lower support, and then you have the touches up here forming the resistance. We broke down out of it, and then we're on the verge of reclaiming it. This is a daily chart though. Let's see if we are able to close above it and put that neutral. And then let's look at this chart from a weekly standpoint over here. And we're, yeah, that, you know, we got some work to do for a bit of a recovery to get into there. Just jumping back to, oh, that's not the chart I wanted to show you. Let me go back one more. And from this point of view though, these green areas, these green dots, they show when that particular structural line has been tested in the past, and it's very important. This was forming the support after the intern leak and the spot ETFs launch. This is the launch of the ETFs. This was the sell the news. Do you know how many people at that particular time were like, the spot ETFs are a sell the news event? And I remember very clearly, I haven't thought about it to just now, but at that particular time, there were so many analysts telling you that that was a sell the news type event. And then on the launch, there was a massive scare. I remember very clearly at the height of that scare at $37,000 saying, by next month, by February, I expect price to make new all-time highs. Price made new all-time highs. I think it was lucky though. How often, whenever making a call and it's correct, and looking back, I'm always like, wow, that was actually lucky. And I think it's lucky. I think that the strength is knowing when to be in the market, when out, and what side, is taking all the discretion out of it. I think that's the strength. And then over here you had the Japanese yen unwind, the summer of 2024, and it was a massive risk-off event, and that touched the line as well. And then you could see that we lost that line over here. So that for me is actually, and maybe it's being invalidated. Maybe we're about to reclaim it, and if so, you know, on a weekly, what does that look like? I would like to know. Is that just a wick? That's a little more than a wick. You know, for me, that's a sign of weakness. That's not strength. And because we're talking about, yeah, on a weekly time frame, prices making actually higher highs, and that's very true. But at the same time, if we want to look at things, which we do, just from a neutral standpoint, like, we're interested in what is, not in what we want to happen or what we expect to happen to be correct. And so it's not just about like chooser believers. Chooser believers. My wife likes to say that I'm a chooser believer. I believe what I want to believe. Well, that's partly true, but mostly not. I want to believe the truth, right? So we're trying to look at what is actually the truth of the situation in this particular moment. And yes, while we have technically higher lows, at the same time, structurally, we have taken out a very important structure. Now, it could be invalidated by getting back above it. And we're on the verge of that. We're very, very, very close to that line. One could argue that as price is right here, exactly where it is, that, you know, because you can see the wick right under there. If I went like that, you can see that we're right above it. And that's probably true. We're on the verge. But this is, for me, this one, the one above it, where the April low was, that's really the one that I want to be above, because I see us right now trading structurally, as far as higher lows go, making a lower low than the April. And look, I know that's crazy because that's not how T is done. Because, well, price is above it. That was $75,000. Price bottomed here at 80,000. Obviously, that's a higher low, but not from my perspective. It's actually, we actually took out that low from a structural standpoint, and that's the way I see the market. So I think that we're weak until we trade above that structure right over here. And that structure right over here, by the way, I have to move it up like this. Oh, I don't do that. I'm moving, my eyes are over here, right? This was off the low, but now that we broke below it, this is where the resistance is below. It's still a pocket, much the same way we just looked at this and said, well, that's a pocket. This is a pocket, but we got to close above, and here have it over here roughly. It's sloping upwards. So right now, $101,500, and then it's slightly moving up. So this area is really what we need to recover. And of course, until you're roaring in the bliss and price discovery, there's always resistance above. And as you all know, as most people don't, even when you're in price discovery, there's still trendline resistance above. So we'll look at that in Ethereum in just a moment, because people want to look at upside targets on Ethereum. So again, we want to reclaim this as well, this channel over here. We're on the verge of doing those things, but we're into resistance right now. A quick look. Is it a dead cat bounce? I mean, what's favorable here in this particular moment is that the NASDAQ is under massive repair. So we need to look at the NASDAQ next for this conversation to take place. And then we can move towards the Solid Pepper Kid. Great to see you here. Big, 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 big shout out to Solid Pepper. So we've made the biggest drawdown so far of this cycle, but it's still relatively well within range of what all drawdowns have been. It was unexpected in so much as that we made this drawdown without breaking out to the upside, a 40% drawdown almost. This is on a closing basis. On a closing basis, 35% drawdown. Obviously, all at well within means. And the only thing that I could point out here is, well, this is happening in much the same way 2019, what caused the Fed to stop QT and begin that balance sheet expansion. That's where we are in the Fed cycle. I've been abundantly clear about that leading up to it for a really long time. So you all know that. You're all well aware of that. And that makes just complete sense for what's taking place and why at this particular time. And because of that, so by the way, we are well within. So if you're selling the second close under the weekly 50 SMA, as so many analysts are, you're selling down over here at 86,000. Now I know some very smart people who were buying at 85,000. They had, when price was under pressure a week ago, they were bidding lower, and price was still above 92 at that point, 93 perhaps, and they had some orders in down there hoping that they would get filled. They got filled, and right now we're just bouncing. And you can see that, hey, it's also normal to bounce even back into the 50 SMA. And often you see price obviously doesn't, this line doesn't mean anything. It's just a simple moving average. Price always, goes both ways above it. So for sure we could trade above it. And this is nasty. The same analysts who are at this point saying, okay, this is the sell signal, this could easily close above it for a week or two. And then they're like, oh, now we got to flip to the buy side. But I'm not convinced when price trades above that we're out of the woods. So far for me, this looks like breakdown. If we get a retest into it, we're not out of the woods or anything or anywhere close to it. We're going to look at Ethereum zoomed out in 1 minute. really, 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 really going to get close to that. So hold on 1 second. Oh no. Yeah, does not smell like a dead cat call. So, all right. From this standpoint over here, I just covered that as I wanted. Let's go over and move over to something that I don't have on the list, but is very important. After looking at the NASDAQ right now, after looking at, obviously you're all well aware of it, but the one chart showing things are about to bottom here, and I gave you the counter view over on Macro Voices. We're going to look at the NASDAQ right now. After the NASDAQ, we're going to look at Ethereum, and then we'll look at V4 and how it's been performing, and we'll continue the conversation like that. So NASDAQ's under a massive repair. This green line represents ever since price made a new all-time high right over here, making the all-time high, right? That green line was the first technical breakdown. You can see once, twice, 3, 4 times we've tested into it, finally closing above it. I should be on the daily here. So let me get on the daily. And over here, we close below it. First technical breakdown occurring on the NASDAQ. And now we've made that repair. The repair was either getting back above the green line, which we are right now, or until this line broke over here, the yellow line that we had over there. And we're making that repair, and we closed above it yesterday. This invalidates this green line over here. So I'm going to get rid of it now. But before I do, I just want to see where it bottomed out. And you guys are going to love. You're going to love this mojo. I love this. Do you see what happened over here? Look at that spike down after Trump told you to buy. So we have 1 touch, 2 touch, same structure of that trend line. Y'all think it's important? I think it's highly important. Why? Because we just made a repair. What's the first thing we do after we have a repair? We look for the breakdown. Not any different than we have over here, jumping over to our Bitcoin, and we say, okay, this is the entry we're taking. I showed you why that's wrong, in so much we had a triple black diamond underbelly, but I missed it. I mean, and that's why we looked at it today. And you could see over here the resistance, the support. That's horizontal for sure for some people, and for me, is also this structure. And look at this wick of, oh my goodness, you see the wick into it. You see this that support, resistance, support, and people have been just tricked by this horizontal nature of what they believe in the markets. But point being over here is you're looking at where you're wrong. That's the stop loss. That is, I moved it up, and that's where we are. But I'm moving up this green line now after it was broken, then invalidated, repaired. Because if we break below here at any point in time from going forward, that's the next major breakdown. This is invalidating this repair. So that's the dance that we're currently doing. But right now, we are seeing the NASDAQ here making a major repair just off all-time highs. This chart's pretty cool. This is tracking S&P 500 off of a 20% correction. For those that are new, what's really interesting is that this other deviation that you're seeing, the top one, that's the 1998 track. And the 2 years before 1998, 96 and 97, S&P 500 had 20% plus returns. Where we are right now in the red, also, same thing. Previous 2 years, S&P 500 had 20% plus returns. The interesting about that is this is only the 4th time in the past 100 years that's happened. So that's it's not different, but it's definitely standoutish. And you could see, which is just really neat, at that same time in 1998, there was that steep correction and then that steep V recovery, which is very similar in nature. And it's just interesting. It's not a strategy, but it's interesting. And then coming into the end of the year, from where we are right now, by the way, in 1998, it takes out that low right over there from that November low. It takes it out. And then that is actually after it takes it out into the end of the year, Christmas week. That's the low. And by February is making new all-time highs, market up roughly 7-8%. So just so you know what that would look like, here's the low, right? And that would be another technical breakdown for me. We have the low here, the low here. So I just want to look below, and I don't know where the Look at the 2 touches over there. So the ultimate breakdown, by the way, for the markets, I say ultimate with tongue in cheek. The ultimate for this track since the April low would be all the way down here. And if we broke that up, then I think, even though I had put this over here as what my expectations were, we definitely have some room, but that would be bad news bears. And what kind of drawdown is that? Roughly, by the time you break it, close to bear market territory. That would be bad news bears. I don't want to see that happen, but it could happen. And I'm just tracking out. I'm just trying to play in advance. I hope I didn't lose anyone. I'm just trying to play out in advance what could potentially take place, because if we take out, roughly a month from now, that November low, right? You can see us taking out that low, technical breakdown. We'll play whatever the repair is. But last time that happened, by February, we were substantially up off that low. We were about 7-8% up off of that low. What? What was that? I don't remember what happened, Ace. I want to remember. Oh, I remember exactly who you're talking about now. Trend line should be at the bottom of a candle body, not the wick. No, well, I'm going to have to go and say that I don't know. Look, you're going to tell me then a one touch trend line is not a thing, and you need 2 or 3 touches. And everyone in this room knows that's absolutely false, because our TA is incredibly avant-garde. It's incredibly avant-garde. The reason is because it doesn't come from anyone else's. It was completely formed and born here and is completely different and is next level. But we've moved beyond that. We've moved completely into mechanical. But our TA is next level. It's avant-garde. There's nothing else like it. So no, it's bodies and wicks, and it depends on the situation and what the market's paying attention to. But no, there's no way. Could 200 day on maybe. Very strongly maybe. NASDAQ here, peek in. And by the way, we had the Fed Beige Book release. Fed Beige Book is just pointing out or highlighting that K-shaped economy, and really the discrepancy growing between the haves and the have-nots. And the haves, they're spending like never before because their wealth is increasing like never before. And we know about that bottom portion of the economy of the people which is growing and suffering. And when I look at what's ahead, that's going to grow even further in both directions, in so much as that, again, if you're aware of the automation that we're on the verge of, if you could just look at transportation, which is the largest employment industry in the United States, trucking, logistics, it's going to be automated. What is going to happen to all those jobs? Either which way. This is such a great positive day. I don't want to get into that today. Expectations are that cut is coming in December, and sure enough, tech is leading as we expect. And we also expect, by the way, just to recap with you, what we want to see once balance sheet dissension, QT stops, and the balance sheet begins expanding upwards, we expect tech to lead out of that. That's my expectation, is tech leads out of that. It could take Bitcoin a minute to find its footing. And in the previous cycle, it put in a lower low, even though tech didn't. So guys, don't expect like December 1st, QT stops. If the balance sheet begins expansion, that Bitcoin's about to go boom. That is not the expectations whatsoever. We're out of the market. I'm going to just pause here 1 second, and then I'll come back to this chart. Let me just jump over really quick to positioning. And let's jump over. Obviously, Bitcoin bull runs out of the market here since 113. Our only open position is on MicroStrategy, holding an open short trade, 34% into unrealized gains. And we have today a potential enter long pending for Monday morning on FNGU. So that's absolutely awesome. If you look at what's happening with TQQQ, we have over here the look, we just looked at the NASDAQ from a discretionary standpoint. And from a discretionary standpoint, as of yesterday's close, that thing was made a repair and obviously bullish. We have an extension today. We have our ST2 filter keeping us out of this trade. And, but just so you know what's going on over here, and let me just go ahead and bring this into light. If you look at taking the ST2 off, you're going to see two things happen. So I'm going to take off that filter. And you can see that, well, overall drawdown increases a few percent and overall P&L falls a little bit. It falls a couple 100%, but if you have just a difference of like 7% and 12%, 2 or 3 trades back a few years ago, that compounding effect is why it's such a drastic difference. So it's not a drastic difference if you're zoomed in and looking at just a year or two, but over time, having that ST2 filter on is preventing overall profitability. And you can see even the last trade taken with the ST2 on, there was an entry right over here. And that trade would have been a loss, a 6.8% full stop loss. And you can see when I turn it back on now that that loss was prevented. So like it or not, in this moment, the ST2 filter is keeping us out of the market. And that's what it is. And that's why. And all I could say is, well, data is data. And yeah, I could see someone discretionary long on TQQQ out of that right here, looking at that breakout yesterday that closed above. That's a buy signal. So discretionary standpoint, you're long. That's awesome. That's good. I'm trying to figure out authentically where I would have that stop loss. If you just went long over there, like where are you looking for a stop loss? So obviously below the yellow line is you're out of that trade. You're back to neutral. And then I'm just want to play and see like what will be a much tighter. So this is probably I'm coming off the low right there, and because I understand structure and board on Nord would say, well, that's the body, but I'm going to say, well, I'm going to go to the wick, and you can see the wick here, and you can see the wicks there, and there, it's structure, so it's all over the place. So it's not that one's right or wrong. All right, just pick a level, stick to your level. But I'm going off of my experience, right? So I would have on that long over here, this would be my stop loss from a discretionary. That would be the tightest place to go ahead and look for where you get now on your exit if you're discretionary long. I think that's great. I think that's the best way to do it. I'm just going to go ahead, zoom out over here, come back over here to the daily. So that's our equity positioning. Buy side boost remains well out of the market, safe and protected, preserving capital. Phoenix Fire, the architect of buy side boost. This is basically someone who's buy side only. And generally what we do is between our templates, you're trading these 3 templates on crypto. You're trading Bitcoin, Ethereum, and Solana. And so if you enter a trade on Bitcoin, normally you're taking 1/3 of your capital and you're putting it onto Bitcoin. And Phoenix Fire was like, I'm in the US. I can't use, like, I feel like my capital is not fully being put to use. And what he was able to backtest and put together, like, brilliant, was a more efficient use of capital. So for example, if Bitcoin enters a trade and Ethereum and Solana are out, he enters 100% of that capital used for trading buy-side boost into Bitcoin. And then let's say Solana, a day later or 3 days later or a week later, why Bitcoin is still in that open trade, enters the market. He exit 1/3 of the capital and enters the Solana trade with it, locking in profit. And then he has 2/3 of his capital now to put to use. The 1/3 of the Ethereum trade is still in the open Bitcoin trade. And if Ethereum is to enter the market, that last 1/3 comes out of Bitcoin and into Ethereum and then enters the market and is really, really brilliant. He's been now for the last few days back testing buy side boost on V4, and he likes what he sees. The main question on everyone's minds, by the way, let me finish positions and then I'll move over, is on swing trading over here. Ethereum's still short 6%. Right after this, we're going to move into Ethereum, potential profit targets, and Cardano is short, open trade 25%. Throughout all this carnage, throughout all this uncertainty that people have been navigating, like CTM positioning is like, oh, no, short MicroStrategy, banger, 30% plus. 30% plus. Ethereum is just short, positioned on the right side. Cardano here, opening up, developing a position over here. Let's see how close it is to exiting. Jumping over and just looking, that is very close to exiting. Still holding that short. And it looks like it could potentially be getting ready to break down. If not, it could be closing later today or over the weekend and locking in a nice trade. That's conquering the markets right over there. Not knowing when to be in the market, when out, and on what side. Let's continue talking about V4. And V4, first of all, obviously, and hyping over, just asking on the Discord this morning or last night, not sure, like, when are we going to have it? Look, we want to have it released yesterday, but there's nothing easy about it. So it's going to be released as soon as possible. There's nothing, like, guys, think about it. Understand what we've developed, the edge that we have. There's nothing else like it in the markets. There's nothing easy about it. We're trying as best as possible to get out the release, and I thought it would be released by now. Here we are. We're almost there. It'll be before we know it, and I hope before January. I hope in December we're able to do that. But it is what it is. When we're working extremely hard, and life is life. Bitcoin over, since November, we've had a few trades over here, all on the short side, taking 2.8, right? This is back into October. So I'll start here in November, the last couple of weeks. And it has been effective on the short side, about 14%. Ethereum, a break even in November. And then nothing over there. So Ethereum break even in November. Cardano, 9% loss on its last trade. Is it? And on the sidelines, we're still on V2 short over there. So 3%, 9%, 8%, 7%, minus 3.5%, and then 9%. So that, both all navigating extremely well in Solana, out on the sidelines throughout all of that, not doing anything. Extremely well, but extremely well. V4 is, so John, we had in March of 2022 the release of our mechanical trading, and it was, we call CTM 2.0. And by that summer, the hive mind, the collaboration between hundreds of people worldwide, had all of our stable versions. Like, there's been no changes since. And then about a year later, Javier, big shout out, Javier, drops, built on top of CTM 2.0. We call it V2, CTMX V2. And then this was amazing to see, the whole situation of CTM. Within 6 weeks, we had all of our stable versions, which have been live ever since, because it was just basically taking CTM 2.0 and then adding on top of it. V4 is the next release, built on top of CTM 2.0, built on top of CTM V2, and it's V4, and it's the last 2 years of work, V3 and V4 into one release. It's the last 2 years of work, money management built on top of everything below that. So it's the progression of CTM. Um, like if you got to just join us. This is like join us on the inside through the website. It's V4 is going. We're on the verge of release right now. We have all of our stable versions. It's just like, right. So we have for Bitcoin and crypto, we have our CTMX V2. It's Bitcoin buy side only, both sides. Ethereum, Cardano, Solana. Our CTM 2.0 versions that we were just speaking about, the originals from 2022. And then on stocks, we have for the 1 hour, for those that are very active or fully automated. And then the daily that we talk about, right? So we have TQQQ, NVIDIA, FNGU, which is FANG Plus, Tesla, and the Bitcoin spot ETFs, and MicroStrategy. We're focused on Bitcoin and crypto, the top four. Bitcoin, Ethereum, Solana, Cardano. And then we're focused on tech, right? So TQQQ, FANG Plus NVIDIA and Tesla. And then we've added the spot ETFs in equities, Bitcoin spot ETFs, and MicroStrategy. And then we have the bull runs over there. No, this is waste. That's a great question. The question is this an AI trader? Let me just jump back. I'm going to get into Ethereum in just one moment now. No, we have used machine learning in the development of all our templates, our mechanical trading. But the main advantage here over the machine learning and over AI has been the collective collaboration of the hive mind. Everyone that's been involved in this project for years, under my guidance, under my leadership, but that collective power of everyone having the same incentive and working together in unison from people of all walks of life from all over the world. And that includes like brilliant PhDs, and it includes people working like, for example, one of the most instrumental people in all of this has been someone who works a catering job. And you have no idea what it means bringing together talents and from people of all walks of life. And is a major advantage over AI. It's been like AI is well behind us. That's our advantage as we move into this new era that we're in with AI. We have all those tools at our disposal, right? All of those tools. And these tools today, like Cursor AI in the hands of a brilliant dev, is an absolutely phenomenal tool. But it takes a brilliant dev. Yeah, AI is behind us. There's no question about it. So let me jump into and look at with you to end this on Ethereum and some potential upside. Now, some people believe the top is in. Imagine Ethereum ending the cycle with a double top. Are double tops even a thing? I don't know. Anyway, so let me get my bearing. My own premise, my own belief, and I didn't even get to share it with you. I think this is probably pretty important to discuss. Right now, you're seeing total monetary supply under massive pressure over here. If you all remember, I put out a brilliant thread out on X at the time that everyone was talking about global M2 and that it's kicking off and rising. And I was like, that is a poor indicator at best. And the reason being is because every time Bitcoin tops, you've seen between a 40 and 60% correction on Bitcoin by the time it shows up in M2. It's just poor. And I talked about, and I did this with a collaboration with Ben Cowan in 2022, talking about monetary base total. And at every market peak, you see this pull back, and why it's so much more effective than M2. With the one caveat is that it lags by a month. The data is not released to a month later. So, for example, over here on global M2, um, if I pull up a chart of Bitcoin, like a month later, you're going to see Bitcoin, this is at 109, has significantly corrected, right? And likely M2, M1 total pulling back further over here. The thing is this. This is in relation to Ethereum right now and my belief. That's why I'm pointing this out to you. I believe we are right over here in the Fed cycle. I believe we are at the particular point in time where the Fed has just begun rate cuts and is getting ready to stop QT. Now, there's no doubt the Fed has already drastically wound down QT. It just has $5 billion a month rolling right now. But December 1st, that's about to end. And then more importantly, or as important, well, more importantly, the Fed's balance sheet is to begin rising again. We don't know at the pace yet, and likely it'll be slower at first and then accelerate higher. But at this particular point in cycle where where QT stops and balance sheet expansion happens, monetary base total is about to rise. You can see it over here. This is where we are right now. Zoom out. This is looking at 5 years, right? If I come out to 10 years, this is September of 2019. Now, this is different. Where this goes parabolic is where they come in and print. That's the next portion of the Fed cycle. The amount of time it's going to be. Last time it was between September and March. I think it's going to be longer. I hope it's longer because we don't want them to have to turn on the printers. That is absolutely terrible. Why is it terrible? Because we just looked at that disproportionate between the haves and the have-nots. And anytime they turn on the printer, the devaluation of the underlying of the currency, the debasement of the currency, it's a horrible thing. It puts people and the stress that it puts it when you're trying to just be able to afford food, to afford your electric bill, and to afford your rent. It's absolutely a horrific situation, and it's going to get way worse the next time they turn on the printers. But that's one thing, but I don't believe that it's going to be as a rapid situation when they need to go ahead and there's a lot more going on today. Without getting into the nuances of the role that the Treasury is placing today under a regime of fiscal dominance and the amount of QE that's already bringing into the markets, which is why we've seen over the last 2 years, even with monetary policy tight, markets ripping upwards, which is about to change because monetary policy is about to be loosened. They're easing into an AI boom. And I think that this is going to last longer this time. But this time, once you see the balance sheet start rising, you're going to see risk, I believe, very favorable to that. This is not a bear market, moment when when they start pulling back monetary base total. That's a bearish aspect. You could see it happening right now in Bitcoin. You could notice the NASDAQ pulled back 8%. Right? But you notice Bitcoin pulled back 35%. But here's the thing is that stops. That's stopping December 1st, 2 weeks away, and it's about to begin going the other way, which is not conducive of what a bear market looks like. And over here, by the way, you can come back to right over here, December 2021. Remember the last bear market, 2022? That's because they went into a tightening cycle. They raised rates. You see monetary base total completely pulling out, and that was a bear market. And then here's the bottom, right over here. It starts going the other direction. We're just about to end this particular phase of this last pullback that we've seen, which happens, here's the last one over here, happens every time they're forced to stop QT. Which happens every time they're forced to stop QT. They begin cutting rates, and then they have to stop QT, and then that organic balance sheet begins. That's where we are. that's not a bear market signal, in my opinion. Now, if you think otherwise and you want to affirm your belief, watch this interview over here with Michael Howell, and I'll put the link in here again. All right, watch that episode. That's someone who believes different. Now, if you understand my premise and then you're listening to his, you'll see where the flaws are, including that, well, he believes this liquidity cycle is roughly 5.5 years. And he believes that because that's what the global refinancing schedule looks like. And then I look at it and I said, well, that's changed drastically over the last 3 years because now they're just rolling over short-term duration and they have no choice but to do that. That's the loop that they're in. Ethereum. So where Ethereum was this last time of Fed cycle, and guys, you all know that since 2020, I've been like, this is a Fed cycle. This is not a. This is. I know how sharply in tune we were to the 4-year cycle up until right over here in January of 2022, when we said, all right, we got to make sure that we are able to move well beyond that. Fed cycle, and over here, right? What happened? The Fed began tightening as this cycle ended here, this previous cycle. The Fed then is now in the process of beginning to ease. Last time they began to ease, we were over here. I'm going to point out on it. So I'm trying to express to you why I don't think that we're about to enter a recession in 2026. By the way, I don't know if it's true, I heard David Sachs said in the past few days that 50%, I don't know if this is true, 50% of the GDP right now is made up as a result of the AI boom. Warren Buffett, the value investor, just went all into Google. Not really known for investing and following bubbles, right? This is Warren. And 50% of GDP, we're looking at Atlanta Fed estimating that current GDP is tracking 4.2%. Not like what a recession looks like. Now, if at any point in time, and that's what we're watching for, we have to be able to change to the markets. And it's a holiday. We might only have a few people in here. We do have a few people in here, but go ahead and hit that like button here. Show a little bit of love on this Friday after Thanksgiving for us all getting together. But this is a phenomenal session for those that know. Go ahead and hit that like button, smash that like button, spread the love for sure. Where we are in cycle, I believe, is closer to over here. And this is the last time that the Fed moved from stopping QT and beginning to raise their balance sheet. And notice that while tech led from this moment right here, September 19th, that there was a bit of a hiccup on Ethereum. Ethereum didn't make a lower low. Bitcoin did. I think it did. I'm pretty sure it did. And then after that, by the end of the year, you saw Bitcoin. I'm looking at Ethereum here, but Bitcoin find its footing and begin rising until you had the global lockdowns. I don't think it's going to be the same, but I think it rhymes. And I think this is where we are in cycle. And I think we're moving towards, and I think we're going to see it reflected when we hit that re-acceleration in 2026. Not recession, re-acceleration. And I think that you're going to see PMIs beginning to continue in the current direction they're in. And really, you're going to see the fruition of the business cycle where you move into the running it hot phase. And that is what brings those euphoric moves, right? Now, I don't think Bitcoin has, because of market cap, the same type of euphoric moves it's had outside of an adoption event, and or we saw it with gold. Gold's market cap is significant. Gold's market cap is 10 times greater than Bitcoin's. And you saw with such a market cap, significant moves. So maybe why I've always been saying I don't think Bitcoin will have any type of euphoric move outside of an adoption event. I've now seen very large market cap move up very quickly in a short amount of time. So who knows? That's authentic, belief about what could happen. Um, boom, boom. CTM in the room. So I believe we're over here, somewhere in this situation. I don't believe that December 1st, as QT stops, and assuming balance sheet expansion starts right away, because the pace will be slower this time, I believe. We'll watch it. I don't believe that means like Bitcoin finds its footing in crypto and we're off. I think that tech should lead first. That's very important. And soon after, Bitcoin and crypto find their belief. If I'm right, though, and this cycle is extending well into 2026, I think that Ethereum is going to make a new all-time high in 2026. Okay, so let's look at what the potential targets could be. I think it's a very good way at looking at where we are in cycle, expectations, and why. And I know, and I get it. Right now, with the exception of a few, I would say like um, I know there are a few people who resemble my line of thinking. Amongst them would be someone like Lynn Alden. I believe Darius Dale is still on page. He might have changed. He's also very nimble, so he could change his view when presented with evidence. I respect that. And Luke Roman, also, I believe. Most people, aside from that, I believe, are like bear market, recession, 2026. I think. I kind of focusing on our bubble, so I'm not really sure, but I believe that's authentic. I believe 2026, we see Ethereum make a new all-time high. And then I have this pockets over here. I have in red this resistance that we're seeing over here. You all have a better idea from this episode what structure is. Most of you in CTM are experts on structure, so you know exactly what I'm talking about. But this is an area of resistance over here that I have in red. And I think that there's a good chance that that would be the high point of where we're able to go into. So depending on when Bitcoin, when Ethereum is making that new all-time high, and when the market comes, it's sloping upwards. So you could see it could be anywhere from around 10,000 in March, and depending on where we go, and this would be what I think is the highest point that we go. I think that the orange line, between the yellow and the orange is a more probable target of where we'll be. And for an example over here, if you have into September of 2026, that's between almost 9,000 and 10,000. And I think that's a pretty good gauge of where we could be. And again, I don't know the timing. I don't know when we're approaching that upper structural resistance in that area. Could the one below it, should that also be yellow, right? A lighter yellow, a little below. Yeah, those are my targets. Now, that's one way of looking at it. I have to also look at it this way through this structure with you. And this structure is more along the lines of what I was doing here with Bitcoin, with Amazon. Look at that. Like this, I haven't looked at this in a long time. This Amazon here. And look how we're respecting that structure right over there. I wonder what's up over here because it's been a long time. I'm just going to where we last peaked out, right? And it's not perfect, but you could see the structure there. You could see that that was, right? It's not perfect, but it's really good. That was the support that was broken, then resistance, support over there. That's the resistance. I mean, it's structure. Tesla, I have over here. Tesla, I heard that for Elon's pay package to be realized, I think that Tesla would be trading at $1,000. I know into 2030, I put like, I think 2030 is right here. Like, I think a realistic like mean of where Tesla should be trading at is 800. Yeah, it's December. That's January 1st, 2030. This is in the mean right over here, just around 800. Is 1,000 wild? And I don't know when he's expected to meet his targets for his pay package. He's gonna meet them. I think he's gonna meet them. But yeah, it seems well within what our estimates are. Look at this. Is gold is breaking above. Hold on a second. Whatever. This is where we are. And look at the beautiful support and resistance. Look at that is where we peaked above. The bodies are pretty close. Let me come down to a daily over there just to get a better look at this. This is all fascinating. We haven't looked at that in a minute. Look at that. That where we formed what? That's where we formed support, then broke resistance. Much, I mean, it's as accurate as you could be. Because I know we have that downward sloping line. So which is interesting because hold on, let me get this exact. I'm going to come down to where we just hit the resistance. Wait, before I do, I need to know why I had that there. It's a tough one. It goes like this. All right, because I have the resistance there, the support there. So I have that little area here right now. Bodies, wicks. Ah, where's my friend? This is important. Board on Nord. It's bodies and wicks always. It's not one or the other. They both play an important role. And then you can see on our gold chart over here, which I gotta just jump into if I can find it. Oh man, that's right here. So just to give you an idea of where I've pointed out a break above is 42.50, right? Looks pretty close. 42.50. Above 42.50 is above the last wick up over here, and we really got to clear above here, right? So that's even better than the look I just gave you, that discretionary look. Like above a 4,300, that is, you know, very important. And now I have to move up over here, that last line off the top. So after moving up to the top, I just want to see what that looks like in the bottom. That last top line, it's pretty close. Interesting, fascinating, I would say. And that brings us back to Ethereum. All right. Jeremy, just before I finish here, because we're on Ethereum, I'm never good with this. I tried this morning. All right, we have to close this out, but before I do, let's finish Ethereum here. Are all the like? Listen, when we return to what is like alt season, and I think that we've done a fantastic job at showing it's when PMIs are about reading about, you know, above 56, 57 is when we're looking at the moment here for alts and liquidity to be ramping up. And at that point, yeah, I think that like Link and Cardano and XRP and all them are going to be doing their thing. But I think we're far from that. We're not there yet, you know? So timing is everything. Let's look at this structure, which the whole point was to show you first this particular structure view I was looking at. And then this one, and I just explained to you the relation between Bitcoin, Amazon, Tesla, and gold. And I got caught up in a beautiful little fun exercise. You could see I like this one in so much like we broke that major trend line on Bitcoin. And we talked about the Japanese yen unwind. We talked about the launch of the spot ETFs. And you could see that it goes up over here. So I have too many lines. And these two I'm going to highlight because they're important right now for where we are. Yeah, there you go. Support, resistance. We're above it now. We need to reclaim that. That's above roughly 3,500. I kind of like the structure here. So I don't, this zone over here between the yellow and the red, and it could go down one further easily. So this would be targets into, I'll just go January 2000 and what did we look at last time? no, blah, 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 blah. I don't even know. But here we are. It's not much different. So I have, this is October 2026, somewhere, but it's a little lower, very close. That was between 9,000 and 10,000. This is between 8,600 and higher, 12,600. All of that is very realistic to me. From wherever we've hit that reacceleration and we get towards those points where those PMIs are in that range that I've talked about with you, those are my top side targets for Ethereum this cycle. I don't think we're about to hit 2026 bear market. I think we're about to hit 2026 reacceleration. Fed cycle is moving towards easing. And I think that this is where we are in cycle. All right, y'all. Thank you, Robert, for that. Either way, I love this stream. I'm so glad to be back here with y'all, and very important stuff for those that put the work in. This was gold, and we'll do it again on Monday. God bless you all. Have a great weekend. Lots of love, CTM.